Hi, I'm Jenny Brown. Welcome to this week's edition of MFB News. I hope you're incredibly well. You've had a good week. You've been able to get out and enjoy that very, very lovely sunshine when it makes an appearance. It's been a really busy week for me, actually. I've been at lots of landlord events over the last week, and we work very closely with a landlord association called iHouse, who are really, really brilliant. They're so knowledgeable and they're really fighting hard for their landlords. And I've been learning lots about the Renters Reform Bill and really listening to how landlords are feeling about the proposed changes. So a bit more on the Renters Reform Bill to follow, but also this week we're going to do our usual roundup on what's been happening in the lending space. There is some quite important messages to come through on this one this week. And then we're going to be talking a bit about what's going on in terms of arrears and repossessions before we move on to the Renters Reform Bill. So loads of great stuff for you this time around. Okay, interest rates and mortgages. So I think it's fair to say we're probably going into another bit of a hold on to your hats type period in terms of interest rates, unfortunately. So for those of you who watch this video, often we talk about swap rates all the time because they're so important. They would drive what is essentially fixed rate mortgage pricing. And we've seen swap rates sitting at kind of 3.8, 3.9, sometimes just tipping into the 4% brackets of 4.02, that kind of level. Now, what we've seen in the more recent days and sort of in the last week is that swap rates have been sitting consistently at just under or over 4%, so not coming back down to where they kind of naturally floated around to. And actually over the course of today, which is Tuesday, we've seen swap rates actually really climb quite aggressively. So before coming to record this video, they were at 4.2%. Now, what's going on here? So essentially there is real concerns around the US national debt position and the inability for Congress to reach an agreement on raising the debt ceiling and thus avoiding the US defaulting and therefore wreaking havoc on the global financial markets. So that's kind of what's going on in the background there. So the UK financial markets are feeling incredibly nervous about this situation at the moment, which is pushing up swap rates. Now, because swap rates have been consistently higher than they were, so we were down at 3.6% for quite a while, then started ticking back up and they've kind of really moved again. We're hearing lots of lenders talking about the fact they're planning on withdrawing and putting up their rates over the next week. So I think the message for you is if you've been looking at interest rates, you've got a deal on your table and you're thinking, well, I'm not sure if I'm going to take, so I might just ride things out and wait for a few more weeks to see what happens. Our advice is very much this: all the signs are there in terms of increased pricing, that lenders are going to move their interest rates upwards. So if you can get in and secure a deal this week, we would really encourage you to do so. Okay, so that's kind of my pearls of wisdom for you, but actually what's been happening with the lenders in the week running up to now. So this is kind of real live up to the minute information about what we think is going to happen going forwards. But actually in the last week, there have been a couple of changes just worth mentioning. We have seen, first of all, MT Finance reduce their rates by 0.1%. So very, very small reduction, but a downward move nonetheless. And their rates are now starting from 5.45%, but please watch the arrangement fees. Now, MT Finance are very much a specialist lender. They're really good at things like borrowers with minor adverse. They can lend to trading companies, SPV limited companies, layered companies, no maximum number of properties in the background, no minimum income requirement. They can do holiday lets. And also they're very good at property with deck access. So deck access property, if you imagine a block of flats, ordinarily what you would do is go in through a front door, go up some stairs or in a lift, which is internal in the building, and pop out in a kind of lobby, and then there'll be various entrances to the individual units via internal doorways. Deck access is where you go up a set of stairs, pop out on the outside front, normally front, not very often the rear of the building, and you walk along a balcony that's along the front of the building to get to the front door. That's known as deck access. So lots of lenders don't like these, but MT Finance are very, very good at them. Now, we've also seen West One make some very minor reductions. I've got the words here, smidge, very small reductions. Their pricing is now from 4.72%. West One, again, great for limited companies. They're very, very good at ex-local authority flats, and actually they can consider some pretty racy properties close to commercial as well. They're very good in that space. Another thing they're very good at as well is corporate lets. So rather than letting your property to an individual person, you might let it to a company instead, or maybe a 3-year, 5-year lease arrangement. They're very good at those as well. So a couple of lenders downward pricing. We've seen one upward move this week, and that's from BM Solutions. Their pricing now from 4.24. BM, very, very vanilla lender. I mean, they've been around for yonks. They used to be so prolific. It's a real shame, actually, that they haven't kind of really moved on from things. So they're pricing now from 4.24, no more than 10 buy-to-let properties in the background with these guys, no limited companies, no multi-units, no HMOs, none of that kind of more sort of interesting stuff, as it were. And also just to know that you can have no more than 5 mortgages with the Lloyds Banking Group, which incorporates things like Cheltenham, Gloucester, and Lloyd's actually is another one. I'm trying to think of all the names of these lenders now who have kind of since departed the market. But 5 within the group and 10 in total. Now, having said that they're kind of a fairly staid lender, they've actually got a couple of really good things going for them as well. So first of all, actually, personal name borrowing on straightforward properties, where you've got no more than 10 buy-to-lets in the background, actually scoops up a really large number of landlords. So that's perfect. Now, their service is incredible. We really, really like dealing with BM Solutions in terms of things are super, super quick. They are very, very reliant on their sort of computer systems. Things just kind of slide straight through. So really, if you're looking for something that's really fast, they're brilliant. Another thing we really like about them is they are super, super good at retaining existing clients. Generally speaking, if we send a borrower to BM Solutions, we don't tend to expect them to move away from BM Solutions, although there are some exceptions to that. So generally speaking, because they're so strong at offering you really great rates to stay with them, we don't often move people away. And the last thing just to say about BM Solutions, they're very good with what they have is they don't have really a set criteria. I mean, there's certain things like studios have to be more than 30 square metres as an example, but when it comes to things like properties close to commercial, high roads, ex-local authority, that kind of stuff, they don't have set rules in place. They very much rely on their valuer to advise whether they think it's good security. So the valuer essentially has veto rights. Now, some of you would have had probably less than successful experiences with valuers in your time, and you would see it's a bad thing. But actually, I think it's really refreshing. The lender's taking a local person who understands the market and will be able to say, actually, do you know what? Yes, it is 2 doors away from a takeaway, but we don't think that will actually adversely impact the resale ability. So we think this is good security. That's really practical commercial thinking, which we really applaud. Now, the only other change from the lenders this week is we have seen Interbay introduce the offering of product transfers to their existing borrowers. Now, Interbay is a lender. They're part of the One Savings Group, so Kent, Reliance and Precise Mortgages are the names you probably have heard of. And these are their more sort of commercial lenders. So Interbay would take on larger HMOs, so anything over 10 rooms or block of 10 flats. They can also do semi-commercial and commercial deals as well. Now, for those of you who have tried to get a commercial mortgage with the high street, you would know that people like Barclays, Lloyds, NatWest, they're really pretty much closed to business, if I'm honest with you, at the moment. Whereas we have the challenger banks, so the likes of Interbay, Aldermore, Shawbrook, Hampshire Trust Bank, Alica more recently. These guys are very much open to business. And so what we find actually is that when you go to a Shawbrook or an Interbay as a lender, exiting away from them, you're probably going to be moving amongst those lenders. And when you come to refinance commercial property particularly, it can be quite expensive because it is solicitors, separate legal representations, 2 sets of solicitors' fees. Valuations are more expensive on commercial as well, and then you have the usual arrangement fees and all the rest of it. So actually, the fact that Interbay have recognised that there's a real need and demand for existing borrowers to be able to stay with Interbay and just take a new rate is really encouraging. So look, if you are an Interbay borrower, you can take on purely residential properties, so essentially buy-to-lets, pricing from 5.99. If you're doing a product switch, their new business pricing is a bit more competitive. Semi-commercial rates from 6.99 and full commercial rates from 7.99%. Now, UK Finance have produced their latest data in terms of arrears and repossessions, and I think this makes quite interesting reading because obviously this is a kind of reflection of the market and what's happening, so I think this data is really important for you to be aware of. Now, the first thing to say is that there's been a 5% increase on the previous quarter in terms of arrears and repossessions in the homeowner space, so a 5% increase. So just keep that number in your mind. So UK Finance have said there are at 7,030 buy-to-let mortgages in arrears of 2.5% or more of the outstanding balance in the first quarter of this year, which it said was a 16% rise on the previous quarter, a 16% increase. I mean, that's massive, isn't it? Out of that total, nearly half, so 3,420, were in the lightest arrears band of 2.5 to 5% of the outstanding balance. This is a leap of a third compared to the previous quarter. They also have said that around 410 buy-to-let mortgage properties were taken into possession in the first quarter of this year, and that's a rise of 28% on the previous quarter. Now, having read this information and trying to think of something kind of really interesting to say about it, other than the fact that it's just a little bit worrying, I think the key message is this. If you are having problems with your mortgage, the first thing you need to do is pick up the phone and speak to your lender. Lenders are actually incredibly good at looking after clients who are facing financial difficulty. So what most people do is if they're falling behind their mortgage, they tend to bury their heads in their sand, try and sort of pretend that it's not happening and all those kinds of things that as humans it's very, very natural to do. But actually the best thing you can do is deal with these things head on. So pick up the phone to your lender, explain the situation, they'll work out some kind of arrangement with you, which will help you avoid falling into large amounts of arrears and ultimately getting repossessed. Now, once you've had a mortgage repossessed, it is incredibly hard for you to get a mortgage in the future. So you really want to avoid that at all costs. So if you guys do have any difficulties at the moment, the other thing, you're very welcome to give us a call at Mortgages for Business. We're very happy to kind of talk about how you might be able to kind of reconfigure your finances and try and kind of make things a bit more manageable to help get you back on track. But like I say, the best port of call always is your lender. Now, the Renters Reform Bill, so as I mentioned, over the last week I've been to 3 different landlord events where the Renters Reform Bill has been very much the hot topic of conversation, understandably so. So what I wanted to do is just run through some of the key kind of points that have come out of the Renters Reform Bill. And actually these are things that have all been talked about, you know, in the run up to this over the last 4 and something years, build up to it being released. But actually what I also want to do is then talk about the kind of steps that are going to be gone through. Because this is quite interesting, because I don't know about you, but I'm not really particularly an expert on how laws are passed in government. So I wanted to kind of talk you through the steps that are going to happen, and also then really share with you what you can do if any of this in here is making you, unhappy and you want to kind of voice your concerns. So the first thing that's going to be going is Section 21. Now, for those of you who watch this video, you will know that Section 21 is quite dear to my heart because I'm currently using Section 21 to get rid of a non-paying tenant. So I think it's fair to say that Section 21 being abolished is not a great thing for landlords. However, the sense that I'm getting when I'm talking to landlords and landlord associations is that actually there are going to be new grounds brought in for repossession, which may help balance this. And also there's going to be a renters ombudsman introduced as well, which might then help, first of all, speed up the court process. If the courts are dealing with less kind of arbitration and actually just dealing with proper court cases, this would free things up. And one of the things that I've found with my property and getting it back is just the time everything takes. Every time something goes in front of a judge, you're waiting for kind of like 5 weeks, 8 weeks for anything to actually just get looked at. So I think actually if it speeds the process up and there's more grounds brought in for repossession, that might actually go some way to at least to kind of countering the abolishment of Section 21. Now, there's going to be no more fixed term tenancies, they're all going to be periodic. Now, speaking to landlords, this seems to be mostly of worry for student landlords rather than landlords who rent to single lets. And actually, if you want more information, probably the best thing you can do is speak to a landlord association who'll be able to kind of advise you on this, but this is the sense that I'm getting. Now, the next thing is that tenants are going to be able to give 2 months notice at any time, so they can move into a property today and give you notice and move out again in 2 months' time. Dear God, I wish I had that for my tenant. They're going to be changing the notice periods under Section 8 on grounds 8, 10, 11. So that's going to be increasing from 2 weeks to 4 weeks. One of those grounds is non-payment or rent arrears. That's going to be increasing. So if your tenant hasn't paid any rent, if you serve a Section 8 on them, that means that they're going to have to give them 4 weeks notice to leave rather than 2 weeks. They're going to make it illegal for landlords and agents to impose blanket bans on renting to benefit claimants or families with children. I mean, there aren't many landlords who ban children, as far as I'm aware. I suspect it's only if you've got, for example, a studio flat, you're not going to really want to rent that to a family with kids, but that's coming in nonetheless. It's going to be a decent home standard. Now, decent home standard is one that's come up quite a lot in the landlord events that I've been to, essentially saying that the property's going to have things like a reasonable sized kitchen and this kind of stuff. Now, with all of this, it's going to be very much the devil's in the detail, and this is going to kind of be the stuff that comes out in the wash over the coming weeks and months. For example, how much space is reasonable for food preparation? Now, actually, if I'm cooking, I only need probably less than 1 metre long because I'm a very, very tidy cook who washes their stuff up as they go along. My partner uses every single pot in the kitchen and the whole thing's absolutely covered. So what's reasonable for me and what's reasonable for him? Very different things. So again, devil's going to be in the detail in this as it comes through. As I mentioned, there's going to be a new ombudsman. There's going to be a digital property portal, which will be set up so that essentially tenants can say, okay, I want to rent this property. I can see that there is a gas safety certificate, the electrical checks have been done, there's the EPC available. The tenants will be able to essentially check out the property before they kind of move into it and make sure everything is up straight. Now, another one is that renters are going to be given the legal right to request a pet in their home. Now, actually, as I'm understanding it, this has always been the case, but they're kind of making it official. So you can't actually say on a tenancy agreement, we do not allow pets. What you have to say is that they can seek to ask for pets, and this can be declined with reasonable reasons. This has essentially just been made as a formal requirement. What else? Rent increases can only be done using Section 13, and I think you're only going to be able to put your rent up once a year going forwards. Landlords will belong to a redress scheme and a decision to be treated as though a court order. Now, with all these things like ombudsman, redress schemes, and all these kinds of other things that have been brought in, I think one of the big question marks is going to be, it's all very well and good, it sounds very well intentioned, but who's going to pay for it? So mortgages for business, and as with all regulated companies, there is a financial ombudsman who will arbitrate if someone complains and we don't agree with their complaint. All financial services firms have to pay in to cover the cost of this financial ombudsman. It's not free, we're paying for it, and we're absolutely fine to do that. But when you talk about bringing, for example, a property ombudsman, who's going to pay for that then? Is it going to be the landlords, or is it going to come out of the government money? I doubt it. I suspect it will be the latter. So those are really, I think, the key changes. Now, interestingly, chatting to landlords over the last few days, there are some of them who are very, very worried about this, and there's certain things within each of the kind of changes that they're, some people are more annoyed about than others. But I think the general kind of consensus is that actually, if you're running a good property, you're running it efficiently and you're running it above board, actually most of these changes won't necessarily impact you unless you want the tenants to leave the property. In the day-to-day kind of running of a buy-to-let where you're a good landlord and you have a good tenant and everyone's kind of happy, broadly, a lot of these changes really won't kind of impact things too much. So it's really reassuring to see that actually lots of the landlords I was talking to were actually feeling fairly philosophical about the whole thing. So in terms of the timelines about what happens now, so next month there's going to be what's called the second reading. It's a date to be confirmed. There's an expectation it will be in the week beginning the 5th of June. And this is the first opportunity for MPs to actually debate the main principles. Let's not forget there's quite a large chunk of people in government who are landlords themselves. The debate is going to be opened by a government minister, most likely the Housing Secretary Michael Gove or Housing Minister Rachel McLean. At this point, actually, Labour is the official opposition in response to the bill, and backbench MPs from all parties are invited to give their opinions. The second reading takes at least several hours and possibly more than one day, given the complexity of the Renters Reform Bill. They expect it to be the latter. After the second reading, we then move on to the so-called committee stage, where the panel of around 20 MPs, usually chaired by an MP with experience in the subject, has the power to examine the bill clause by clause, including consideration of relevant amendments from the MPs. This is where they really start sort of saying, okay, here's the prepared bill, here's all the kind of comments from people who have looked at it and had something to say. Let's bring the two together and really start going into, is this the right thing to do, what needs changing? Now, at the committee stage in the Commons, MPs can take oral and written evidence on the bill. The bill proceeds then to the report stage, taken in the whole House of Commons and not in committee form. At this stage, only amendments are discussed. And finally, there is the third reading. It's another general discussion on the broad terms of the amended bill. No additional amendments are permitted at this point. And then finally, the same thing is going on in the House of Lords with minor variations. And once the bill has been through the third reading in both houses, it goes to receive royal assent and then it becomes an act. So likely timeframes I'm hearing on this, and they expect it to kind of become law in circa 1 year's time, and then there'll be a run-in period for people to start to actually implement the changes. So we have lots of time. So the key message I'm hearing from the landlords associations is that if you are unhappy with anything you're hearing about in the Renters Reform Bill, the thing that you can do which will make a difference, and if everybody does this, it really will make a difference, is contact your local MP and explain to them what in the Renters Reform Bill you're unhappy with and why, and the impact it's going to have. I think that's really the key message. The more people that go to their MPs voicing concerns and dissent, if that is how you feel about it, this is where things actually start to make a difference. If we simply just sit back, discuss how unhappy we are and how the whole thing's not fair and rely on somebody else to sort it out and hopefully fix things, we're probably not going to get very far at all. So if you are unhappy, you know what to do. And that's it for me this week. I really, really hope I come back next week and things have kind of moved on in the US and we're in much more stable footing. But like I say, at the moment, the money markets are very, very jittery, swap rates are climbing and lenders are talking about repricing upwards and not insignificantly either. So please do keep that in mind. And on that note, if you do have any questions or you want to discuss your mortgages, what's available at the moment before they will disappear again, give us a call 0345 345 6788. Have a look at our website, mortgagesforbusiness.co.uk. There's lots of information, including a how much can I borrow calculator. You can source rates, there's lots of case studies and all that kind of really wonderful stuff. Have an amazing long bank holiday weekend. I heard a rumour that the weather's going to be nice. So let's hope, fingers crossed, we'll have a really, really super time, and I'll pick back up with you again same time next week.